Hello, everyone. Welcome to our first webinar from Smart Blocks. We're going to talk about the future of real estate investing with tokenization and why it is clearly going to take over everything. My goal today is to convince you of why that's going to happen, why tokenization is going to take over, why it's a good investment now, why this should be on your radar like ASAP. And before I do, I'm not the only one that thinks this. I'm going to show you a video from Larry Fink. He will convince you, as I've been convinced, that tokenization is the future. But again, don't take my word for it. Listen to Larry Fink and what he has to say about it.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem. I actually believe.
Okay, well, you heard it from him himself. Sorry about the video playback, a little kludgy. I'm usually a little bit better about that, but anyway, he says basically tokenization is going to be the future of finance. I couldn't agree more. And specifically the tokenization of securities. Look, this is going to happen. It's much more efficient, much more cost effective, and you could trade around the world almost instantly on our platform in 4 clicks. But before we get into any of that, let's talk about why I believe some more evidence around why tokenization is going to be just massive. Here you have Warren Buffett, huge fan, read Intelligent Investor. Benjamin Graham read most of Warren Buffett's philosophy as it relates to Benjamin Graham. But it still took him 20 years to become a billionaire, as good as he is. If you look at Vitalik Buterin, the founder of Ethereum, it took him 3 years. Why only 3 years? Well, way less friction to moving money, in this case, cryptocurrency around the world, and you have a global market, whereas Warren was only operating within the United States. And that is true with tokenization. Tokenization is not crypto. Tokenization has a lot of security features. It's actually legal, and it's backed by assets. So it's just taking digital shares of something that normally you'd get on a piece of paper, and you're able to do quite a lot of things with it, like trade it, like sell it, buy it, just like a stock, right? So tokenization is going to play in this, but there won't be one Vitalik Buterin. There's going to be thousands, if not hundreds of thousands, that when tokenization gets going, and I'll tell you when, you'll be able to profit from it tremendously. Okay, but first, before we do, what is tokenization? How does it compare to fractionalization, to REITs, to regular real estate investing? So let me tackle the first one, tokenization versus fractionalization. Fractionalization is kind of the front end of tokenization. It's not on a blockchain. You can turn a real estate project into, let's say, 1,000 shares, 100,000 shares, but you're just selling those shares. And those shares are basically dead at that point. Yes, you can earn income from them. Yes, you can develop revenue once the project is sold. You get a piece of that, but you can't do anything with it. You can't trade it. You can't borrow against it. It's very difficult to do those things if you want to try it offline. And normally, most people don't even try. It's too expensive. It's not worth it. With tokenization, that eliminates all of that. Right? You still have the fractionalized real estate, but it's represented by a digital share, which is a token, and that token's traded on a blockchain. So you get all the visibility of the token, the project, who owns it, who doesn't own it. So it's very easy to transfer or sell that token to another user anywhere in the world, as long as the criteria of know your customer and anti-money laundering is met, which is done when they buy the token, or if they've done it before and that wallet has been KYC AML'd. And so therefore, because you could sell it anywhere in the world and you could sell it instantly on marketplaces, it's much more valuable than a fractionalized piece of real estate. Moreover, in about a year, you're going to be able to collateralize those tokens and borrow against them, kind of like margining them without selling the underlying token. If you're a real estate developer or real estate owner, you'll be able to take those digital tokens that you've minted and borrow against those if you need to finish a project or you need to cash out somehow. So that is kind of the difference between fractionalization and tokenization. The difference between tokenization and REITs, well, tokenization, it's like more like buying a stock, but that stock is in a specific property, whereas REITs are more like mutual funds where you own a portfolio, but you're also paying hefty fees and success fees and all the rest of the stuff that you won't pay with a tokenized piece of real estate. So think of it as buying a stock, not a mutual fund with all the fees and everything that they're doing, and you've got way more control over what you own and what you don't own. Okay, all right, so let's look at a typical situation with tokenization. Right now, if Ravi had real estate valued at $10 million, the only people that can invest in that are very wealthy LPs or institutions. But with tokenization, anyone as low as $500, $50, whatever you want to set it at, can buy into that project. So what does that do for Ravi? That opens up the world, doesn't it? He now can get investment dollars from a global investor base that outside the United States doesn't even need to be accredited. You need to know that they're not money laundering, or you need to know who they are, of course, but that opens up 99% of the investment pool, 99.9 that he normally wouldn't have. That's amazing. And this can be done in the world, not just the US. I'm speaking from a US perspective because I'm in the US. But you've got a huge, huge, huge amount of money that you can access that you couldn't without tokenization. All of this is managed on smart blocks, by the way. So when Ravi wants to sell those tokens, he just places the property on the site, smart blocks, and we do all the rest and distribute this opportunity to all the investors that are on our platform. That easy. And like I said before, 4 clicks and either Mary or Sarah can own that property or a piece of that property, depending on how much they invest. Okay, quick quiz before we move on. How does tokenization differ from fractionalization of real estate? I know we talked about this a few minutes ago. I'll give you a few seconds to kind of look through the answers before I reveal this, but this is just to check and see if you were paying attention. All right, so of course the answer is C, and tokenization uses blockchain technology, offering enhanced liquidity and transparency compared to traditional fractionalization, which has neither. Okay, so why am I doing this? I mean, I'm doing this for the average investor, right? I look at this as a David versus Goliath situation. I don't like the big dominance of the corporations and very wealthy investors that are getting all the good properties, getting all the good investments, high barriers to entry for the rest of us. If you're not in the club, you're not getting access to these better deals. The rich get richer. Now, I'm definitely a capitalist, but I like an even playing field. Smart blocks is that even playing field where you can get access to these projects, whereas normally you would never get access to it unless you're part of the club or have 10, 50, $100 million to put in. This is a view of smart blocks, and we think it's a revolutionary platform. I have shamelessly stolen from Airbnb. We have kind of the same look and feel where you could filter any projects anywhere in the world that are on the platform and invest in them in 4 clicks, folks. And it's got all of the things that you'd see in like an E-Trade where it's monitoring your portfolio. You've got a dashboard. We make it super easy to trade. Eventually, again, you'll be able to borrow against those tokens if you're an investor, and if you're a developer, you can borrow against those tokens to finish off your project or to take cash out. This is the platform. This is where it's starting. Is it legal? I'm not an attorney, so double check everything I'm saying here. I'm talking about how it relates to us and how we've done it in the past. So yes, it's legal in the United States. A primary offering, as long as you're using an exemption. I mean, you can go public if you want. I don't recommend it. That's an expensive proposition. Almost nobody does it. So it's done the same way traditional real estate investing is, and that's a Reg D 506C or a 506B, depending on your situation, or a Reg CF if it's under $5 million. So if you have a property under $5 million, you don't even need to deal with accredited investors. You can advertise to your heart's delight. There are some restrictions as to how much they can invest every year in that property, but at least you get access to the globe without many restrictions at all, just the AML KYC stuff. Same with a Reg D 506C. You can advertise it, but you can only accept accredited investors in the US. If you file a Reg S, you could take investors from all over the globe. They don't even have to be accredited, again, but they do need to be KYC AML. So these are ways of getting through legally with tokenization of real estate, which is just a digital share of a piece of real estate. Now, when we get into collateralization and you get into secondary market trading, all of that has got to be done in a different country. We've lined those countries up, and we expect to offer those services within a year. Best part about tokenization is it can't be hacked or stolen. Technically, it can, but when it is, then all you do is you call up the real estate owner or developer. You say, my tokens have been stolen, cancel them. The developer can do that on our platform in 2 minutes. It's taken away from whoever's stolen. It's reissued back to you, and you got your tokens back. It's pretty simple explanation as to why. First of all, if this were traditional and somebody broke into your house and took shares on paper that you own this real estate project, no matter what, unless they can prove that they're you and to convince the developer that they're you, they can't get money out. They can't get the dividends. Same thing with security tokens. The developer always knows who owns these tokens. And so from that perspective, if you call them up and say they've been stolen, they're going to cancel them and issue a different set of tokens that represent the same shares in the real estate project back to you. That's beautiful, because a lot of people I know are worried about on the crypto side being hacked or stolen, and it happens a lot, unfortunately. So our model versus traditional model. So tokenization for us buying real estate is a 5-step process on our platform, like I told you. If you do that traditionally, it's more like 25 steps and takes 90 to 180 days, depending on the due diligence and all the rest of the things that traditional investors have to go through. With us, it's 5 clicks. That's simple. All the due diligence has already been done. All of the information that you'll need to look at in order to make a decision is already on the platform. We have a third party that goes through there and audits it, make sure that everything's looking good, legit, background checks, and the developer is rated. So you can see what kind of rating that the developer has from the rest of the crowd. Case study I like to talk about is the Aspen St. Reges. They raised $18 million through security tokens, but this was like, boy, this was six years ago. So they're one of the first, right? Maybe 5 years ago. They raised $8 million, basically do a big renovation, and also to work on some of the aspects of the hotel that weren't making the amount of money that they wanted to make. They did that. They increased the revenue. And if you look at the token itself and the value of what's happened there, in 2019 it was worth 18 million. Now the market cap is worth 65 million on these tokens. That's a remarkable return in just 5 years. And of course, that's given back to the token holders in the form of dividends and in the form of, whatever it's sold, they get that money. Now, the cool thing about this whole thing is back in 2019, there wasn't much of an infrastructure in security tokens. This is a huge risk. Yet still, despite all those challenges, they have now, my understanding is they're going to do another security token offering on this hotel, which is good news, right? It means it worked. And it's a further proof point that this is going to change the real estate game forever. Maybe not this year, maybe not the next, but at least within the next 5 to 10 years. So this is kind of a interesting slide, but the big point is that what we're trying to do is democratize real estate investing for the average everyday person, to give you the same power that the REITs, the big banks, and the brokerages have without having to pay all of their big fees. I mean, come on. You know, you guys are smart enough to know that they are in it for themselves. Yes, they want to show returns so you'll keep investing your money, but they're taking a lot of it. You might be making some, but they're taking a lot of it, and a lot that you should be keeping if you just did it through a platform like SmartBlocks or did it directly. But doing it directly requires a heck of a lot of work, and there's no way you're buying a piece of a property for $50 or $100 or $500. This is a way to get wealthy really, really quickly because we've democratized it for you. Okay, so in terms of an investment in just real estate tokenization in general, at the end of 2023 and even in 2024, we're still at the early innovators. If you look at the far left-hand side here. But if you look at Bitcoin, which is a $1.3 trillion market, I mean, it just hit $72,000 per Bitcoin. That did take a good 15 years, 13, 14 years to get to that point. I don't think it's going to take tokenization that long. But the bigger point is, and Ethereum's on its way too. In fact, Ethereum's probably crossed the chasm at this point, but it's not as big as Bitcoin. The point is, when these things do that, when they go through this curve, the wealth creation is astronomical. You imagine owning Bitcoin at $100 10 years ago, what it'd be worth now? You'd be retired several times over. Same thing with tokenization. You get involved in these things now, this is going to happen, I assure you. Whether it's SmartBlocks or something else that comes up behind us or in front of us, investing in these types of operations, these platforms that are enabling this are going to easily surpass what Bitcoin's doing. If you just look at the size of real estate in the world alone, it's 280 trillion. I mean, that's massive, massive, massive amount of money. And that doesn't include debt and equity and all the other things that you can tokenize as value. So point here is we're early, but that's when you want to get in because you know it's going to happen. It's just a matter of when. All right, back to SmartBlocks. Our timeline, we started in June 2021. We became a tokenization agency because we saw the writing on the wall. We've tokenized several projects. In March 2023, about a year ago, we started working on the platform. This has been very challenging, folks. This is not an easy thing to put together, especially with regulation. And by the end of 2024, which is very soon, probably the next couple of weeks, we're going to release it in beta. You'll be able to see it. I'm going to give you an invite when it comes out, and I can't wait for your feedback. So we do have for a limited time, we have a refunder. If you want to get involved in investing in our platform, in the future of real estate, this is going to happen, folks. Just scan this QR code or find us on WeFunder, but the QR code's way easier. It'll take you right there. So if you just, I'm going to give you a few seconds to kind of scan this. If you miss this, then it's, you can just email us and we'll take care of you. But for us, it's like, we think by tokenizing real estate, it's almost as if the globe itself, at least the real estate on the globe, went IPO. And this is an early opportunity to get involved and invest in it. And we think we're going to be one of the big hitters that delivers on that promise. So that is it from me. I would love to connect with you. And the QR code in the lower right-hand corner is a different QR code that you can connect directly with me. One of the things I'd like to point out is that go to and also enroll or subscribe to my newsletter. All we talk about is tokenization, tokenized projects. It's beyond real estate, but anything tokenized is what we're talking about on that newsletter. It's not something you want to miss. I think it's the biggest distributed token-related newsletter in the world. It's combined with LinkedIn, has got over 5,000 subscribers. And because it's early, I think this will just explode as more and more things are brought online and tokenized. I mean, you see the BlackRocks, the JP Morgans, the HSBCs, they're already tokenizing bonds and money market funds. This is just the early days. And by following the newsletter, getting on the newsletter, you're going to see this thing grow, and we're going to show you where all the opportunities are along the way. So that's it for today.